Hello and welcome to another edition of Client for Life. Thank you so much for joining me. Today I wanted to just quote a couple of statistics. The clearance rate last weekend was 73%, 78% last month, but I would say, given that the month hasn't closed, that we're probably on target, and spring is in the air. As we all know, that drives real estate pricing. There's a little bit of talk at the moment that because there is a glut of properties coming on the market, many people wait for the flowers to come out in the gardens to look beautiful, that might actually help some buyers. With more properties on the market, hopefully that might actually have an impact on pricing. Personally, I think with the market that we've got at the moment, it really is a matter of digging deep, having a bit of courage, knowing your affordability, your serviceability and your capacity before you take off to the auction. I had a lovely young man come to see me the other night, terribly distressed that he'd actually bought a home in Greensborough and had paid $30,000 more than he'd wanted, and his fiancée was terribly upset about it. But when we did the numbers, he certainly was within the range of what it's asking for today. So, you know, there is a little bit of overextending going on out in the market, but at the end of the day, the bottom line is to have your plan, know what you're capable of affording, and really deciding if this is the market for you at the current time. There are people out there in the market saying don't buy. I actually think that's a little bit irresponsible. People are saying that it might crash next year. Other people are saying it's going to grow 13%. So I really think you have to make your plans right here and right now, work out what is good for you, and if you want any advice, I'm always here to answer your calls or take your emails. Now, just talking about the general investor market now, I've probably never been as busy as I am right now. There are so many people who are encouraged by the low interest rates. They're obviously encouraged by the continual growth, and what we're seeing more than ever before is the confidence and the strengthening in the apartment and townhouse market within the donut. It's, as you know, it's solid. We've been preaching the donut for 7 strong years now, and we have proven to be resilient through a GFC market and outperform house and land packages, outperform the metropolitan suburbs, and compete very, very well with the increase in house pricing. The medium house price in the donut hit an all-time high of median price, just closed at around about 1.239 million, which is up from 1.167 last quarter. So that's quite a good growth. And apartments are still tracking growth. Obviously not the dynamics of house and land in the donut. You know, in suburbs like Hawthorn, Camberwell, the medium unit price in Kew today is $672,000. Now, wasn't that long ago that was the price of a house in Kew. I just want to comment on the banks and their tightening policy around the investor market. We haven't seen a huge impact here at Solid, and that's simply because most of our people are earning reasonably good money, $80,000 a year. Most of them have equity in their home, and most of them are starting out their portfolios. So once again, if you're concerned about credit and your investment capacity, I'm always here for a phone call and email anytime that you'd like some advice there. But we're certainly busier than ever before. Just want to comment on the stock market and the time clock. Olivia put together a fabulous article about a fortnight ago in our newsletter. I don't know if you read it, but it's certainly in sync. You know, the share market's having an absolute hammering at the moment, and the property market's off the scale. So just in relation to the banks and their tightening of policy, which is really being driven by the government wanting to slow down the investor market in Melbourne and Sydney and the residential market in Melbourne and Sydney, the bank shares have obviously taken a little bit of a hit on that one. I personally have experienced in my investment lifetime that interest rates have always been high for investment properties. They're certainly high for superannuation funds, and they're certainly high for commercial investments and commercial bills, leases, etc. So I actually think that's just a blip on the radar, and things will settle down very, very soon, certainly for the banks and for the investor market as well. The US dollar, they're talking about putting interest rates up. That's put a ricochet across the market as well. I think that will settle. I actually think it's positive that the US are looking to put up interest rates, because that's a sign of growth, and isn't that what we're all looking for? A really good, strong recovery. So I'll close on that note. The market is alive and well. The investor market is as strong as I have ever known it to be. So thank you for listening, and I've got a round of seminars coming in October. Why don't you bring a friend? Take care. Bye.